Now for a more in-depth look at perhaps broader markets and investing from a fundies perspective, James Tayler, the Head of Research at Morphic Asset Management, joins me now. James, thanks for joining us. Let's talk about a French company in Australia that you own, Alstom, which makes all sorts of high-speed trains. Why do you like it? I must say this one has run under the radar as far as I'm concerned.
Good afternoon, Helen, and thanks for having me on this afternoon. Alstom's a French company, but it's actually a significant employer here in Australia, in New South Wales and Victoria. And it manufactures, as you said, trains, trams, and related infrastructure. Come 2019, I think us Sydneyites will all be very happy to see the congestion in the CBD reduced when the trams are gliding quietly down George Street into the western suburbs. That aside...
You mean the trams produced by Alstom?
Absolutely. They're producing the trams. They're not responsible for the holes in the road that we experience at the moment.
We'll still blame them for it. So why, I mean, do they fit in a way your kind of ethical screen too?
Absolutely. I think it's clear that train transport is one of the more efficient modes of transport globally. There's a theme that in both the developed world, where urbanisation is increasing, that train transport is about the only viable solution to move us around. And likewise in the emerging markets, where there's also urbanisation, trains again are a very efficient way to move the growing populations around. And Alstom is positioned in South Africa, in India, and also throughout the mature part of the world.
Yeah, so is this company really very much at the forefront of technological change?
Absolutely. For instance, they're currently trialling the first ever passenger train fueled by hydrogen, zero emission, the only emissions being water and oxygen. That's a train intended for regional lines. I think that would fit very well here in Australia, where for the longer distances out into the rural parts of Australia, simply electrification doesn't make sense from an economic perspective. Also, little known that this company is leading the way in electric buses, for instance, and automated electric buses. Many other large, significant states companies are claiming first in that area, but here's a well-established company that I believe is one of the technological leaders.
All right, I want to move on because I know you watch Samsung, which is obviously a major global company, but they're reporting their numbers on Friday. Now, it has been in the wars, obviously, of late, yet there is some investor enthusiasm. Based on what?
I think three key pillars to current enthusiasm. The first being the product cycle. The new model S8 has just been launched, not in the shops yet, and there's clearly enthusiasm about that in the same way as their main competitor, Apple, generates with the iPhone. Secondly, there's, and I think probably more significantly, there's a well-known US-based activist investor, Elliott Associates, have been agitating for restructuring of this business for the last 12 months. Their point being that the company carries considerable cash and treasury shares, and clearly resolving that through restructuring the company could lead to a significant return of cash to shareholders. And the other pillar being that the Korean market typically trades at a discount to other global equity markets. Perhaps listing Samsung Electronics on, say, the NASDAQ in the US would allow or reward the company with a higher valuation. And finally, the company is still cheap, even in light of having performed more than 60% in the last 12 months. The company trades on a forward PE of less than 10%, it has, less than 10 times. It has quite a generous dividend yield of a little under 3% and quite tremendous free cash flow.
All right. Now, just very briefly, there still are, though, some negatives to that.
Absolutely. I don't think Samsung Electronics can really be held up as a poster child for corporate governance, in light of the fact that the vice chairman and scion of the empire is residing in prison. That said, there is precedence in Korea, in South Korea, for companies being managed by their CEOs through their lawyers. So, yeah, I think the market's more than discounting the impact of that.
Yeah, okay. Look, James, that's so interesting. I think we'll leave it there because do you agree that the market sort of globally, but particularly in America and maybe here, is treading water a bit till we see what happens after this Trump President Xi meeting?
I think we would agree. Certainly, valuations by historic standards are not particularly attractive. At the same time, they're not particularly extended by, according to history. So I think after the enthusiasm or the Trump bump, that having lost some impact, I think there's good reason for many people sitting on the sidelines for the moment, and particularly ahead of the next reporting season.
All right, James Tayler, the Head of Research at Morphic Asset Management, thanks so much for joining us.
Thank you.